Welcome to the B.F. Anderson Technical Report for January the 5th. The incredible January barometer. It's an interesting fact that, statistically, if the month of January is up, there's an 89% chance, using history as a barometer, that the year will be up. Now, when I was in business school, I would say probably the most important courses that we took had to do with statistics. Now, in the past, we've talked about the 7.5% rule, which has been incredibly accurate this year. It pretty much called 17. The other statistics are things like this. Since 1950, there's been only 10 times that the Dow has gone up 25% as it did in 17. Of the following year, after these 10, 25% periods since 1950, of the 10 times, 8 times the market was up in the following year, and the average gain was 13%. But back to the January barometer, basically what it's saying is that if the month of January is up, it indicates something about the rest of the year. Now, what I think it is where analysts are revising their earnings estimates for 18, and if those estimates will be pretty much announced to the market during January, if the projections for earnings for 18 are positive and good, then January's up, which means that earnings are projected to be up. Therefore, that's why the January barometer exists. Now, there's also the early warning system of the first 5 trading days in January, that they have a similar batting average, that if the first 5 days of the year are up, and so far so good, there's about an 89% chance that January will be up. So anyway, just thought that would be an interesting thing to observe. This is a graph of the XOP, which is a sector fund for the oil and gas exploration group. You can see that there's been a major turn here, like a cup, and it is moving up, and we're seeing it above the moving averages. Now, as we continue to go through this list, here's the Energy Select Sector Fund, which has also service companies. You can see the same similar pattern, where we're getting a bottoming process here, a rally, a pullback, and another rally. Now, we know that the price of oil has been moving up. In fact, oil got above $60 a barrel. Now, there are estimates out there right now that are saying that oil could go to $80, $85 a barrel. So we're seeing some new activity in the oil group that we think you should pay attention to. Now, one of the things about statistics that I would like to mention is something called the stock-bond ratio. What I have here is the NASDAQ composite compared to the 20-year Treasury bond fund. So this is what you call the bond ratio, where you're comparing the performance of stocks, especially growth stocks, to the bond market. Now, there is a pattern out there called a head and shoulders, but there's also a pattern called the inverse head and shoulders. Now, this is just a pattern that over time you can see repeated, so you somewhat need to pay attention to it. Here's your left shoulder, your head, and your right shoulder. Now, as this index of this bond ratio, as the line goes up, it's telling you that stocks are outperforming bonds. Now, this is a major breakout that took place at the very beginning of 17 and has continued on into 18. Now, I believe that the bond market has been in a major bull market since really around the early 1980s. And interest rates have dropped to levels that have never seen before. I mean, we got down to 1.3% on the 10-year Treasury. That's lower than the interest rates got back in the Great Depression of 1929. So with all the easing with the Federal Reserve and so forth, it's causing, a major bull market in bonds since the 80s. But we think that things are starting to change here, and that this pattern is telling you that there's a possibility of a change in the relationship to bonds and stocks. I would avoid bonds. I would go to stocks. Now, here are the top 5. As again, the first one we've got here is an oil and gas company, mainly production and refining, HollyFrontier. You can see the strength of the uptrend. Again, retail, brick and mortar retail is actually starting to come on. Michael Kors, which is a very popular brand with the masses. Here's a pharmaceutical, Sage Therapeutics. They got a breakthrough drug. You can see that the stock jumped basically from 100 to 170 almost in one day. So, one thing I'll say about pharmaceuticals, especially biotech, you really need to pretty much specialize in the group and make it pretty much the only thing you do, because it's a very, very risky group. Now, here's another retail, which is down today, but it's been on a tear, is Urban Outfitters. This is another brick and mortar retailer. Now, the Chinese stocks all of a sudden here since the beginning of the year have started to show some life, and we're starting to see some activity in the Chinese stocks. Now, this is an old favorite, YY, software company out of China, making new highs. So we're off to a good start. If you have any questions, let me know.